so this is the latest variation of the brochure. The points I was getting to is up in the upper right-hand corner. It says, during this no obligation comparison, you will learn. And these are some of the points that are the main points to be tapped on when you're talking to a trustee. Some hit points that are on this piece, and the whole objective here is to get them to schedule a WebEx. So you can see the points over here: how to upgrade your current review process to actuarially based analysis, how to have the best restructuring options documented for every policy, avoid unnecessary replacements and verify the results in advance. So that's basically saying the opposite, of what we're attempting to do. We're wanting to replace business. Obviously, the trustee is wanting to avoid doing unnecessary replacements, and the verify the results in advance refers to the fact that we're doing a replacement analysis prior to that final exchange. How to save up to 100% of your cost for qualified policies, how to implement risk-adjusted review cycle to save another 30% every year. That's covered in the WebEx. And then how to exceed all regulatory requirements and retain complete control. We're really just trying to set the stage here so they're interested in a WebEx. Now, to further this, and this will not be available until probably Friday or Monday. What we are doing to help you accelerate your marketing efforts, especially right now, because we have roughly 6 trust companies lined up in the next 2 weeks that are at the final stages of closing. And what happens is a lot of these companies, they make their changes towards the end of the year or at the beginning of the year. So now's the time, if you've been talking to trust companies or banks and then maybe holding off on getting to a WebEx, now's the time to really hit the accelerator, because this is when all the changes are made. So we look to get more trust companies implemented in the next 60 days, than we have in the last 6 months. But in an effort to do this, on the front page of policycheck.com, we are building basically a quote engine for banks and trust companies to compare the pricing that they're using for their current plan compared to pricing for a new plan. So this will be fully available for our next call, but it'll actually be available, like I said, by Friday or Monday. And the way it's going to work is if somebody goes to the website that's a trustee, or you send to the website, they're going to be able to enter in how much they're paying for their current review costs and how many policies they have, and then they can click on, get a quick comparison to see how much money you can save annually as a trustee, and then it's going to lay it all out to save on average for each policy over a 1, 2, 3, and 4 year period. So it builds in all the discounts, all the policy check advantages, and it's going to come back to them. Now, the reason this is going to improve effectiveness is because it's going to increase customer engagement at the trustee level, because now they have a reason to be on the website, click the link when you send them an email, so they can get a specific quote. And from that quote, the quote's going to be designed in such a way that that's going to drive them to the WebEx, because the pricing and the quote is what they work with internally to help decide what the next best step is. So we're pretty excited about it. There's a little bit more programming and everything that has to be done to get this automated, but we think that this is going to drive a lot of results. Mike, do you have any thoughts on that?
No, we talked about it the other night, Steve. I think it's great. It's just one more tool that adds content and support to the platform.
Right. Now, so my understanding is Zach's going to be able to slightly customize this to some degree, so you can have your email on here if you want them to email you to set up the WebEx, or they can email PolicyCheck. Now, it's critical that when you're using a piece like this on email blast, this is not a blast project. We don't want these banks blasted. This is designed to be a follow-up after you've made contact and you know who you're targeting in that bank and who you're speaking to. So when you send this piece out to them, what I would like you to do is copy support@policycheck.com, so we're in the loop on the activity and we know which bank you're contacting, what was said, with which piece that you sent to them, which should only be this piece after we get it completely approved here today. The quicker you can get Policy Check in the loop and then RIC in the loop, the quicker you're going to get them on a WebEx and have an opportunity to get the bank on board and signed up and moving forward. So on other fronts, for those of you who haven't talked to Mike or myself here in the last 3 weeks, Policy Check has made basically made a decision to reduce the cost on the total process at the agent level. And this came about, one, because our volume is increasing, and two, we've been able to automate a lot of the elements of generating the market evaluation that wasn't available before, so we can do this a lot more efficiently. So where the policy cost per policy for the agent was $350, that's now been reduced to $250 per policy for the trust company. And I'm going to see if I can pull up what I just had here. So if you look at the new flow chart that we've developed, we keep improving the flow chart and the presentation that we're using with the trustees to try to keep things as simple as possible. But once again, the focus here, if you look on the screen, is the 3 documents that are provided: the policy review, the restructuring analysis, and the replacement analysis. And what we have done in the past is we have called the restructuring analysis a market evaluation. And we're moving away from that language because the objective of the trust company is to determine how to fix the current policy that they're looking at, or basically how to restructure it. So if you follow the flow chart, once we determine whether a policy is at risk or not, the next step is we need to determine what is the best restructuring option for that policy. Because if it is at risk, it needs to either have something modified with the current policy or the new policy. So in the restructuring analysis, we broke it down to there's basically only 2 primary ways to restructure a policy without getting into really complex strategies. And so the two primary strategies are either increase the funding on the current policy or decrease the face. Then we want to compare that to increasing the funding on a new policy or decreasing the face on a new policy. So if a client is price sensitive and premium sensitive, then you're probably going to want to look at the adjust the face options. If they are death benefit sensitive, they need the maximum benefit for the estate, then the solutions is going to more be on the funding side. So once we decide whether we're going to modify the funding or face, then you follow the flow chart to the left with funding or the right with face, and the market evaluation by doing the comparatives determines whether the current policy is going to be more efficient for that or the replacement policy. And if we're working with the current policy, we use the reduced face option that RIT generates, and we document it in the data track and assist the trustee in getting the face amount or the funding adjusted on the current policy. If we're moving towards using a new policy, then the next step is obviously determine if the client is insurable. So we do that through a HIPAA, an application, taking an exam, and doing all the steps that we do, the preliminary steps in underwriting a policy. If they are insurable, then the final step is we do the replacement analysis before doing that 1035 exchange and then documenting that in data track. So a little bit of change in the language, this restructuring language, and you'll see that in the brochure. And then what we're really going to focus on with the quote engine is that, you know, the best times to use a quote engine is when you have a price advantage. And right now we essentially have one main competitor that charges around $180 per review for their policies to the client, but they don't have the ability. If I go back to the brochure here, they don't have the ability to do a high, medium, and low risk pricing model like RIC has instituted in the last 10 years. And essentially the way that pricing works is RIC looks at their total book of policies, and they determine how many policies are in a high-risk category, which is like UL's over $1 million face, variable life insurance. Any policy that's deemed a high-risk category gets reviewed on an annual basis. Anything that's a medium-risk category gets reviewed every 2 years, and everything that's low risk every 3 years. So when you price, and I'm going to see if I can pull. Actually, that's not going to work. Just here's a very, this is the building blocks that's going on in the background. This is not complete yet, but essentially what it's going to amount to is when they generate a quote, they're going to get back a policy review quote. Here's the first version of this that's being completed as we speak. But for instance, in this case, you had a Geneva, the State Bank of Geneva in Illinois is currently paying $180 per policy, and they have 100 policies. So the way the quote engine is going to work, it's going to kick back a quote for you to focus on with that trustee, so you have a reason to get back in touch with them, and we will know when they've generated a quote because they have to enter in their email on the quote engine in order to grab the information. So you see here in year 1, year 2, 3, 4, $180 all years, and the average 4-year cost is going to be $180. Their cost per year is going to be $18,000 for this book policies. So what's going to happen is the quote engine is going to feed back also the policy check prices with RIC. And because the first year is subsidized, year 1, the cost is going to be $0. Year 2, it's going to be $175, but it's only going to be on the high-risk policies. This is not complete yet, guys. You can see the high-risk policies out of 100, 60% are high risk, 20% are medium, and 20% are low risk. So this data here is fed back in to determine how many policies we're taking times 175. But what it amounts to is 60 policies times 175 is 10,500. Then so the first year we do all policies. That's through the policy check process. The second year, the trustee would pay just for the high-risk policies, which would be 60% of them, which would be $10,500. So in the first year, they saved $18,000 because their cost with policy check was $0. In the second year, they saved $7,500 because they paid $18,000 with their current policy review, and they only did 60% of the policies year 2, or $10,500. Then the third year, we do the high-risk policies again and the medium-risk policies because they're done every 2 years. So the total of that would be 80 policies times 175, which would be 14,000 versus 18,000 for their current provider. And then the third year, it's the same thing, only it's the high risk and the low risk, which once again comes to 80% of the database, but 14,000 again. So the average cost over the 4 years is $9,625 a year versus $18,000 a year, or $96 a policy. It's actually $96.25 versus $180 per policy. So we're completing the chart and the programming for this. But when this is all done, they're going to be able to go in, and the only information that the trustees will have to enter is their email address, city and state, the name of the person that's requesting the quote, and then how much they're paying for their current policies and how many policies they have. They'll punch that in. It's then going to generate basically a quote / presentation that does the comparison for them, so you can really highlight how much money their trust department is going to save on this. We have found, and RIC has found, that these trust departments, smaller banks, the regional banks, the state banks, are much more price sensitive. So we want to hit them basically right between the eyes with the savings potential over what they're doing now, so they have a reason and a motivation to get onto the WebEx. So in combination with the emailable brochure and the follow-up with you on the telephone, kind of following along the track of the information that's on the brochure, and then either getting them or having them provide you the information while you have them on the phone so you can generate a quote for them. And that's basically the latest evolvement of the marketing tools that we're going to be rolling out. So we got some price savings for you. And if you currently have 5 policies paid for in advance through the Policy Check program, now you automatically have 7 of those paid for in advance because the price reduction is retroactive to the first day that you got involved with Policy Check. So with that, Mike, I'm gonna throw it back to you, and you can put any closing thoughts on this, and we can schedule another call if you like next week, Mike, to go into the new tool that's going to be up on the website, and we can kind of go through that for everybody, make sure everybody understands how to use it.
Yeah, a couple of questions, Steve. Number one is the 3 levels: high risk, medium risk, low risk. I'm assuming that's negotiable with the bank. If the bank says, you know, we'll do high risk every 2 years and something like that, is that you know, hard and fast?
Actually, that's unique to RIC, and they, on every policy review, they list on there the risk category it is, and it really doesn't have anything to do with the funding risk or how bad of shape the policy's in. It has to do with, they've determined which types of policies just carry more risk than others. You know, for instance, a paid up whole life with $300,000 death benefit is going to be a low risk policy because it's pretty far from anything really going wrong with it. Versus where a variable SQL variable policy that's linked to the market is going to be deemed more of a higher risk. So it's not a negotiation because then it would lose its consistency in the marketplace. So RIC sets those parameters, and the averages are 60% are high risk, 20% are medium risk, and 20% are low risk. So it's a tool that RIC uses to enable the banks and the trustees to not have to get all the policies reviewed every year.
Right. Okay. And do you want to remind everybody how, when they have a bank and they have a contact in the bank, how to let everybody know that?
Yeah. The easiest, there's two ways you can do it. One, you can just email Steve at policycheck.com or support at policycheck.com, and we'll interact with you immediately to figure out what the next best step is. Research that bank with the RIC database to see if there's been a contact made with that bank, how long ago that contact was made, and any information that may help you get to the right person within that bank to get the process implemented. So it's an interactive process. It's not something where you just go sign the bank up yourself and send us the paperwork. Because RIC is involved in actually contracting, and the bank is involved with vetting RIC. We want to get them involved in the game as soon as possible. So you can also go to trusteeregistration.com and the bank there, but we're probably going to be going more to this quote engine format for grabbing information on the bank, because what makes sense is for us to be doing a hard follow-up on banks, where they've given enough information to you to generate a quote. So the other nice thing about the quote engine is it's going to give the bank a reason to give you more information that will help us get them closed, i.e. how much they're paying now and the number of policies they have. And the great thing is if the bank is using something now, they're used to spending the money, and once you're used to spending the money for something, now it's just a matter of how much can I save on it. For instance, if you already have a health insurance policy and you're paying $400 a month for health insurance, it's no longer a question of whether or not you're going to buy health insurance. The question is, how much are you going to pay for it? So now you open the door for somebody that has the same benefits for $300 a month to have an opportunity to present that to you, because you already know you need health insurance, and now you just want to see how much you can save. So it's kind of the same thing here. If a bank is currently not doing anything and not really doing their job as far as their follow-up with the regulatory oversight and reviews on the policies, and they're not spending any money on that now, then all of these solutions may seem expensive initially, except Policy Check, which subsidizes them in the first year. But it's a lot easier to replace a bank that already has a process in place that we can compare to than it is just starting from scratch, in my estimation.
I think it'd be important to review the statistics on the brochure just at a very high level, just so that's explained to everyone.
Yeah, these statistics over on the left, according to RIC, the 45% of policies are inadequately funded. Now, as you'll remember from the policy restructuring report of the market evaluations and the life track from RIC, inadequately funded just simply means that there's not enough fuel in the tank to make it the full distance of the trip or to reach maturity age of the policy. So if the interest of the policy matures at age 95 and the policy only runs to age 87, then RIC, and this is just one off the top of my head, came back on Janice Allen, which is one of the samples that we've all reviewed together, that there's a 65.33% chance that she will still be alive or survive that lapse event. So that's called a survival to lapse probability. And that's really critical because that number is going to get more aggressive every year that you're involved with Policy Check and the program, because the interest rates and the policies that were out there that were written that were based on illustrative rates, the further we go, the more those policies are getting deeper and deeper into hot water because they're underfunded. So that's the first thing. That number's around 45%. 15% lack competitiveness, and this is based on either being non-competitive or lacking competitiveness, and that's determined by RIC, and they use actually an actuarial, and they're the only company that has a actuarial calculation to determine whether a policy is competitive or not. So they run a comparison company, a middle-of-the-road policy. If their policy is a whole life, they're going to compare to a whole life. If their policy is a variable, they're going to compare to a comparable variable. If their policy, is a survivorship, they're going to compare to a comparable survivorship, et cetera. And what they do is they do a discount to present value using 5% interest, and they take the future value of the accumulated cash value and death benefits at 10 years and also at maturity age, and they discount that to a present value. And then that way they're comparing apples to apples on both policies because it equalizes the value of additional cash value and the value of death benefit or increasing death benefit. It equalizes that between the policies, and then by discounting that to present value, they then determine a cost to benefit funding ratio, which essentially takes, for instance, if a policy for each dollar you pay in premium, and this is going back to an example in the back of my mind, there might be 81 cents of benefits that's being provided to that client when it's discounted to present value. So it's worth 81 cents for every dollar you put in, which is not as good as if you had a policy that's worth $1.10 for every dollar you put in. So by comparing these two numbers, they come up with a cost to benefit funding ratio, and then they got a scale that determines whether the policy is competitive or non-competitive. So it's a lot of detail in there, but when we go over with the trustees in the WebEx and they understand the amount of actuarial horsepower behind this determination, and it's just not something that's done on the back of a napkin, or I like Prudential better than Met, so therefore Prudential's better. It's actually a systematic way of measuring the competitiveness of these policies every time. 9% have loans affecting the policy. 4% are held with vulnerable carriers. Now, this doesn't mean that 60-some% of all policies are messed up, or 63, or whatever this all adds up to, because in the 45%, some of those are also lacking competitiveness, and some of those also may have a loan. So the percentages are not, just stacked up on top of each other, but somewhere in the range 45 to 55% of the policies in an average book of business. In fact, it's just getting more. Basically, about half of any bank that we look at, about half of the policies have a issue that puts the policy at risk, which gives us the reason to go ahead and take it to the next step here, which is the restructuring analysis. So 50% are probably going to go here and down to the left and just be documented. But the reason we do this process and the reason we're in business is so we can get down to these policies at risk, get to the restructuring analysis, and then get the trustee involved with assisting with the adjusting the face or the funding using the current policy or the replacement policy. Does that answer that question, Mike, on your percentages?
Yeah, it does. So we've gone over. What I'll do is I'll send out kind of an informal survey to everybody that attended and see what you think. Please give me some honest feedback on this. And right now we're currently thinking about every 10 days we do something like this as Steve's updating things and things are changing. So feedback on this call would be helpful. We're sorry for the slow start on it. We'll hopefully we'll do that better next time. So
that's my fault.
I really have.
I take the hit. I take the hit there. But you know, the main thing is to make some contacts, and you don't have to devote 10 hours a week to this. It's not a all or nothing type scenario. But if every week you can be reaching out and making 2 or 3 additional contacts, you're going to find out that that you're going to get a lot of great reception from these trustees, particularly at this time of year. And you know, we're here to help you follow up and you know, get these banks on board. So.
Okay, thanks to everybody for attending. I'll send you an informal survey shortly, and look for feedback. Everybody have a good day.
Thanks, Mike. Thanks, everybody. Bye-bye.